peer financial wellness service for students. We're housed in the financial aid office in Sproul 210. I don't know if you've ever been there, but some of the services we offer are one-on-one appointments with students. If you have any questions about anything personal finance related, like today we're covering credit cards, but it could be like loans, like financial aid questions that are not necessarily like that are maybe more personal finance related than like things you would go to like Cal Student Central for. Just a lot of topics, and then we give presentations. So yeah, I can go ahead and get started. Today we're talking about credit cards. Just as a disclaimer, the information in this presentation is for educational purposes only and it's not intended to be financial or investment advice. Okay, so like very basic, we can start with just like what is a credit card. So in its most like basic sense, it's like a plastic metal card which allows a user to borrow money from a bank to pay for any goods and services at the point of sale. So when you're borrowing money, you're not necessarily paying interest yet until like a stated due date that a bank will set, and you'll have a grace period to be able to pay off this money that you borrowed. If that was like a little bit confusing, we can go over the specific terms, some terminology about credit cards. So grace period is the amount of time after the due date that you have, or amount of time after the statement date that you have to pay off your whatever you borrowed. So let's say that the month, like the billing cycle has started, the month started, you're spending money, and then at the end of that month, the billing cycle has like ended, and then you have those extra grace period time to pay off that debt. So you have like a period of time, and the minimum time is 21 days. Some banks might have different, like my bank has 25 days of a grace period. Then there's compound interest, which is the interest calculated on the initial principal, which is what was initially borrowed. And then the accumulated interest of previous periods. So yeah, like interest on interest, if you keep letting that money, if you keep like owing money, it's just gonna get charged interest, and then that's going to continue as a cycle for like all the previous times you haven't like paid that off. A default is failure to make payments towards debt accumulated. Credit limit is the amount of money that you are able to borrow on a credit card. And then APR, annual percentage rate, is interest rate that will be charged on credit card balances. So this will be like the rate that you'll be charged on, like, yeah, the amount of money that you're borrowing. And once again, you'll only be charged this amount if you don't pay off that amount before the end of the grace period. So I feel like it's very important to really like take getting a credit card as like a pretty heavy, or not heavy decision, but just like definitely weighing your pros and cons and deciding if it's something that's smart for you. Because like the slide says, credit cards can be helpful if used wisely to help build your credit, which is super important, but they can be extremely damaging to your financial health if not used properly. So we'll go more into depth of, yeah, like the pros and cons of getting a credit card. There's obviously a lot of pros. For example, rewards. Some credit cards offer rewards. So if you're going to spend money on something anyway, you might as well get like rewards, which a lot of times can be like cash back that you, for whatever you spent, you get a percentage of that back to you. You're able to buy now and pay later, which is helpful if you, for example, see something that's on sale now but won't be later, and you know you'll be able to pay it when your next paycheck comes, for example. You have purchase protection. A lot of credit card companies handle disputes for you really well, so it's easy if you're like a victim of any like credit card fraud, you're able to dispute that and your company will often cover it. And like I said, it helps you establish and builds good credit if you make your payments on time, and you're like generally a good credit card user. The disadvantages are because it is like easily accessible, there is the risk of overuse. For example, if you, and this kind of connects to debt, if you're using it, but you're noticing that you have less income and you're spending more, then you'll just start to accumulate debt and won't be able to like you won't be able to pay off your card. And then you'll have to pay the interest, which is a lot of times for students, the APR, the interest rates are really, really high. And you'll have to pay like late fees or anything if you're not able to pay off the balance. And if you're not making payments on time, this will negatively affect your credit. So honestly, the pros and cons are kind of like a mirror, and it just depends on like how you're able to use it. It will, like a credit card can be a tool for good or a tool that's gonna like hinder you. But yes, it's basically it. So if you're asking yourself, if you don't already have a credit card and you're asking yourself, like, should I get one? Some warning signs that maybe you shouldn't, or could indicate that you might not be in like good control of your credit card usage currently, is that you're using one credit card to pay another. So if you're accumulating a lot of debt on one and you're having high interest rates, then you're taking from another one that might have a lower interest rate to pay that one, and you're just going back and forth like that. Or if you're not able to afford the minimum payment, which a lot of times is a pretty low like fraction of the like what you actually might owe in total. I feel like it's usually a pretty low amount. Or if your credit limit is being lowered, this can be a sign that your credit card company probably thinks, oh, you shouldn't be able to borrow this much. They're lowering it for you. And if you don't know exactly how much you owe, just because this is definitely something you should be aware of, so you're not having to pay so much interest on like the debt. And if you have a lot of debt out there, making sure you're not like accumulating it further. So we can talk about what the costs are associated. So we talked about APRs earlier, just like the interest rate that is charged on what you're borrowing if you don't pay it back before the grace period, before the due date. But more specifically, there are different types of APRs based on how you're using the card. The general APR is like the purchase APR, so whatever you're purchasing. The penalty APR is applied to minimum payments that are missed or late. Introductory APR is typically a much lower interest rate offered for a limited amount of time. This is done to bring in customers. A lot of times credit card companies will have like 0% introductory APR. So that's like a lot of times very appealing to people if they're like, oh, I want to borrow and I don't want to have to pay back any interest. But it is like good to be mindful that this only lasts for like usually for a few months or whatever the offer is. And then cash advance APR, which is applied on a cash advance, no grace period. And then balance transfer APR, which is the APR that will be charged after you've transferred, like if you've transferred your balance from one credit card to another, because that other credit card might have lower interest. So you're able to pay off your debt without having to pay as much interest, basically. Okay. There's, yes, other types of fees. The penalty fee, if you miss a payment, some banks might offer you like a one-time, like no penalty fee for your first missed payment or something like that. But then definitely like make sure to look at that, and also make sure to try not to miss payments. There's the annual fee. For students, we recommend getting a credit card with no annual fee, because this is a card that you want to keep for a long time. If you want to improve like your credit history or length of credit. So that's definitely something to look out for. Cash advance fee, when you're withdrawing cash using your credit card. Foreign transaction fees. So for example, if you're thinking of studying abroad and you want to use your credit card, make sure to look for a card that has no foreign transaction fees. There's ATM fee over the limit when you exceed your credit card limit. And then some banks might not have over the limit if you just are not allowed to even exceed the limit when you're like borrowing. And then balance transfer fee when you transfer debt from one card to another. Yeah, so I would say the average late fee is $29. So that's just, that could add up if you're like consistently missing. So definitely like make sure not to. So yeah, we can talk about like how do payments apply. Once you make a payment, when you're paying off your card, that money is applied first to fees and then to interest and then your principal balance. So it could be possible that if you're like, I'm making payments and my debt isn't going down, like what's happening? It might be because if you're not paying that much, like to payments, and it's not even being applied to the money you owe yet, like the principal balance, it's being applied to pay for other things like fees and interest. So basically the point of this slide is to show that sometimes paying, if you're just paying the minimum payment, that might not be enough because it might not even be reducing like that balance. Like you might just be consistently paying your interest, and then you're just going to be paying interest like forever, or not forever, but for a long time if you're just paying that really low, like the minimum payment. And then we can go over credit card offers. Also a note for authorized user cards. Some of you might be authorized users if your parents gave you a credit card, or if you're like authorized on your parents' card. Yeah, this card allows you to spend with someone else's credit. It will appear on your credit report and your credit score, but creditors may discount this as it's not your own credit. It is a good way to start building credit, and like giving you the experience of like managing or like dealing with credit, but it's definitely good to get your own credit card if you want to start like building credit in a more like substantial way. But yeah, I don't know if any of y'all already have credit cards, or maybe you're like deciding on second one, or like deciding on your first one, or just want to know in general how to best use it. But if you don't already have one and you're looking for one, we first recommend looking for a student credit card, mainly because they are easier to get than regular ones, because banks are looking at you and they're saying, oh, you might not have that much credit history because you're a student, so you're more likely to get approved. And it does oftentimes come with the similar like rewards, APR fee schemes as the non-student counterpart. So they are pretty similar, but that's just the reason. And when you're looking for credit cards, there's kind of three approaches that you might be taking. One is you might be thinking, I want to get a credit card and I want to look for one that maximizes my rewards because I'm definitely like spending money on it. And so I want to get that cash back. So if you're looking at maximizing rewards, you might want to look for a credit card that offers more than 1% cash back on relevant categories. So sometimes your bank will let you choose what the relevant categories are, and it might change like month to month, or for specific partnerships that they have. Like sometimes like if they're partnered with like Amazon, for example, anything that you spend on Amazon, you'll get like 5% back or something like that. So definitely look at the terms for the rewards if you're interested in maximizing that. Another approach you might take is you might think, I just want this to be really simple for me. So like if I already have, for example, a debit card with Wells Fargo, I'm just going to get a credit card with Wells Fargo. And so I can look at it all in the same app, and then I can easily make payments, transfers from like my debit to Wells Fargo, it's just paid off. And a third approach might be if you're worried about like other reasons, like other fees, like if you're, like I said, if you're traveling, no foreign transaction fees. If you want to maybe like pay something off that you or you might be concerned you might not be able to make the full payments or something like that, or you're like paying off some debt, then a low intro APR would be helpful. So just looking at the differences between these when you're applying is good. These are some signs that maybe you are not ready to get a credit card yet. And it's like, for example, if you're looking for a card and you're concerned that you're concerned about the APR, and you're looking for a low everyday APR, because this kind of signifies that you're already planning on not paying off full balance. So definitely, I would say, like, yes, it's definitely something to consider and look out for, but it's just a sign. And then also if you're concerned about the amount charged for late fees, because missing payments is something that can really have a big negative impact on your credit score. So if you're looking at that, I'd say that's maybe another sign for concern. Or if you find yourself running out of money, going over your budget frequently, because this tells you that you might be having to accumulate more and more debt. And if you want to use introductory APR to make a big purchase without having a repayment plan. So definitely, if you want to take advantage of that introductory APR, definitely have like a repayment plan in place and like a budget in place to see how you're like already using, like the comparison between your income and like what you're spending. And then also if you're being like persuaded by any ads or like any pressures from anybody else, if you're like pressures from your banker, which I don't know how often that happens, but like any like external motivations that might not be super relevant to you. I'd say a good rule of thumb is if you're using credit card, right, the interest rates and the fees shouldn't matter, because you shouldn't be really having to pay back the money with the APR, with the fees, or with the interest rate. And then besides the student credit card, these are other credit cards that might be relevant to you all, which is like your specialized credit cards. There's a secured credit card. So if you're denied for a student one for whatever reason, it would be good to consider a secured one. They require a deposit as collateral. So you might have to deposit like whatever amount, just so they know, just because you might be deemed like less credit worthy or trustworthy. And then definitely make sure to find one with no annual fee, just like the suggestion for student credit cards. And then there's balance transfer credit cards. If you're suffering from credit card debt, this might be a good option. It allows you to transfer debt, but you'll need at least fair credit to have a good approval chance. So this might be something down the line if you don't have your first credit card yet. And then there's store credit cards. It's definitely easier to get approved for these, but beware that they come with higher APR and fees, and rewards are usually limited to just like the store that you got them from. So if you're spending a lot, if you know you're spending a lot at that one store, then it may be convenient for you, but so it might be worth, like, you should definitely consider if it's worth it for you, but also consider some of the downsides that come with it. And then if you're thinking, okay, so I want to get a credit card, what should I look at when I'm applying or when I'm comparing my options? I know this is kind of like, might be a little hard to see. Okay, yeah, it's gonna zoom in, but definitely always look at a Schumer box. Credit card companies are mandated to have one of these, so every credit card company or credit card that you're applying to is going to have this. So make sure to look at it, look at the terms. We can look at the terms for this example together. And then, yeah, so basically you'll see this has like the APR for general purchases, balance transfer, cash advance, and it'll tell you your grace period, which is highlighted down there, 23 days. It'll tell you your minimum interest charge. And then here it'll tell you whether you have an annual fee or not. Here it says none, and it'll tell you other fees. So just know, yeah, every credit card you apply for will have a Schumer box. Sometimes they're a little hard to find. They're in like tiny links or like in the little like asterisks, but definitely always like make sure to look for these. And then some good habits to know about or like try to build with your credit card is, for example, asking yourself, would I buy this with a debit card? I guess, yeah, that's basically because you're asking yourself, am I going to have money to pay this off? So would I buy this if I already had, like, do I already have the money to pay it? Or do I know I will have the money? So that's basically what that question is getting at. So some good habits after getting a credit card, we recommend setting up auto pay on your minimum payment at least to ensure that you never miss a payment. Like you might forget or just might like, yeah, pass you by, but a missed payment can have like a negative impact on your credit. So yeah, setting up auto pay, always paying in full each month by treating your credit card like a debit card. So yeah, making sure that you're not spending more than you can afford to pay off. And then ensure that you're not spending extra money just to get rewards. Yeah, I would say this could sometimes lead you to like overspending or accumulating too much debt. Then we can go over like how to read your credit card statement. Once you start using your credit card, your bank will mail you this or email it to you, or it'll be available on the app wherever you check your statement. But it's good to know some of the terms on here. Yeah, hopefully this is like large enough to see, but some of the things that will be on it be like your account number, your closing date, so when the statement was created, your credit limit, how much money you're able to borrow, your available credit, which is, I wonder if I can like zoom in more. Yes, okay, good. Your available credit, how much you're still able to borrow, which you like is what you haven't yet spent. And then account summary tells you what your previous balance was, how much you paid. So this person here paid the amount of their previous balance. And then they made new purchases, which is 523. So then their new balance is 523. And then you go down to payment information. So how much they have to pay is 523, or so they could pay that in full, or they could just pay their minimum payment, $35. But then we can look at the little table on the right. That's basically saying if I didn't pay like my balance and I just wanted to pay my minimum payment, then it would take 1.5 years. And then I would have to pay 627 instead of 523. it's just helpful to see like what happens if you just pay the minimum and let it accumulate over time. And then if you're curious to see exactly how your interest and fees were calculated, your credit card statement will have that for you. It'll tell you your annual percentage rate, the days in the billing cycle, the daily charge rate, which is like the rate that they're charging every day, and either multiplying this by like your average balance, and then you could see like how much you would be charged in interest, and then you're able to see your transactions. And then if you're paying in the mail, which I don't know that many people do these days, then yeah, you would list your amount enclosed, but I think most people pay online, so I don't think you would encounter this. Yeah, so definitely we can look at some alternative resources. If you're thinking you're not approaching credit cards with like a mentality of like being able to avoid credit card debt. Yeah, if you have too much credit card debt, some resources would be maybe contact your bank to see if you can work out a new repayment plan, because sometimes your bank is willing to work with you. For example, like over the pandemic, a lot of banks saw that people were struggling to pay off debt and offered like a hiatus on interest or reduced monthly payments, because they understood that it was obviously like a difficult time. Also, we talked about balance transfers earlier. You could get a balance transfer card to give you a chance to pay off the debt that you have at a lower or at no interest for some time. And then you can explore other loan options. Yeah, generally other types of debt have lower APRs than credit card debt. Credit cards often have very high APRs. For example, maybe like a student loan for some time, like if you're really struggling to pay off that credit card debt, then you might consider like pulling out a student loan, which has a much lower APR, like maybe like 4% versus a credit card, which would have like 25 or higher, or yeah, 20 or higher, whatever APR, but it's a big difference. We generally advocate against like paying off debt with debt, but this could be in some cases like the best option for a student. But yeah, it just depends on your personal situation. But it could be a good idea if you're really struggling to pay off that debt. And you're a student, so and you're able to take out like the student loans. Yeah, so now we can just talk about like if you're curious and you think a credit card is a good option for you and you want to know more like resources, and you want to know like where could I go about looking for one, well, we could talk about that, and like if you want to make a one-on-one appointment with us, we can definitely walk you through that. There's also iGrad, which is like a free resource for students, and it has so much like helpful information. If you just make an iGrad account, and there's so many like articles and like little workshops that you can do. Money Under 30 could give you a good like insight of like analysis on your credit cards. And we also recommend NerdWallet, which is a helpful website, and you could just like navigate to like comparing credit cards. Just beware that like some of these websites might have their own financial gain or interest in mind. They might be pairing with certain credit card companies that they're like putting up towards the top of the list of like the best credit cards. So it is helpful to compare, very helpful resource, but just beware of like those caveats. Okay, so okay. I just saw there's a lot in the chat, but I can definitely answer questions now. I'll answer whatever's in the chat, and if y'all want to like unmute also. But I can go over what
Oh,
I.
sorry. I was gonna say I can
Mm.
also help too, Jacqueline. Thank you also for the presentation. That was really great. I think for myself as well, like I really appreciate it. Yeah, so Gloria had asked, what are some reasons for a student being denied for a student credit card?
I've definitely like encountered this in some appointments. I think like maybe if like your income is an issue, you might get denied because in your credit card application, they do ask you to like self-report like what is your income. And if it's maybe too low, depending on like what they like, what a credit card company might think is too low, then that's a reason you might get denied. Um, yeah, I see like there's a response to that, which is also helpful. Like you can submit a rebuttal. Um, and I think maybe, yeah, I'm not sure. I think other like instances I've had is that like a student was like undocumented. And so they got denied for a student credit card, but undocumented students are definitely able to apply and get approved for credit cards. You just have to look for credit card companies that specifically accept that and like would take ITIN numbers. I know we didn't like necessarily go over that, but that's another reason that a student could get denied, at least from what I've seen in my experience. But yeah, I'm not sure anything else. Then I see two kind of related questions. So like what's a good, yeah, what's a good credit card, student credit cards? I would say I can maybe point everybody to like the website where I would compare them, where I usually send students. I can like stop my share really quick and pull it up, because that question's kind of hard to answer only because it being good just means like what would be best for you, like what are you looking for, like I said earlier, like reward, simplicity, foreign transaction fees, like introductory APR, like there's so many factors to consider. So I'll just say I can like, I'm gonna pull up NerdWallet real quick just if y'all want to compare in the future, and then I'm gonna, okay, y'all are gonna see I have like a million tabs open, but yeah, I just typed in NerdWallet, so I'm gonna show y'all how you could like navigate it. So you go up here, like our top picks, then you could say best credit cards, but you want to look at best of student cards, and then you can compare, like these are pretty good. Like personally, I have Discover. Some issues with Discover might be that not all like places where you're making purchases take Discover, but they do have generous like reward rates. And then definitely just like there's pros and cons to each one. So if you're curious, just like compare. I know students that have like, yeah, so here for you can look at like their pros and cons. You can look at rates and fees here. This might lead you to their Schumer box. Yeah, so this is kind of like what the Schumer box that I talked about earlier, that's what that looks like. So I would say if you're curious, like look through that to see what some good student credit cards will be. And then look through like the stuff that we talked about today. And then I'll stop sharing. I see Michael said, how important is it to start building credit early? What might it help with in the future? That's another great question. So I would say it is pretty important to start building credit early because that's a factor of what goes into your credit score, and it shows up on your credit report, like the different types of loans you've taken out and when you took them out and like your length of credit history. So when lenders, like if you want to take out a loan for a car or for your apartment, or yeah, landlords might look at your credit score, or even employers in the future. Employers are able to look at your credit score, and that might be important to them for whatever reason, like if you're getting a job at like a government position or a bank or something like that. There's a lot of reasons why your credit score will be, or your credit in general will be super important in the future. So this is why it is important to start building credit early. Yeah, somebody said, I have Chase credit card, got it when I was 18, and these past years have helped me build my credit score. Yeah, so length of credit history is something that goes into like determining your credit score. So it's definitely good to start early, but definitely don't start if you feel like you're not ready yet. So just start like when it's appropriate for you. I don't know if I see any other questions. I can just share this again. Sorry. Yeah, I'll share this again for if y'all would be able, if you have not already filled out the workshop evaluation form, that's super helpful for us just to like track like any feedback, or yeah, tracking like students we've been able to help. I'm typing it in the chat.
Also, I had one question too. If you're someone who doesn't spend money that frequently, or like you don't foresee yourself spending a lot of money, should you consider like even having a credit card, or is that something that like would even affect your credit score in the long run? Or is it better to like start early, or like when you're able to know at least you can pay off whatever you need to by a certain deadline?
Yeah, I would say definitely like it's good to get the credit card when you know that you're like consistently being able to like pay off everything. And also if you're like able to like if you're putting money into savings, that's another good sign, because you know that you're not gonna like keep depending on your credit card to like pay off whatever and then like accumulate debt. So that's a good sign of like when to start. And if you're not spending that much on it because you don't spend that much money in general, I would say like you're not going to get penalized for not like spending on it. If anything, like we didn't talk about this here, but this is something that goes into the factors of like what determines your credit score. And there's this thing called credit utilization rate. I don't know if y'all heard of it, but I can put it in the chat if you want to like look into it more later. But it's just like the amount of credit that, or like the amount of money that you're spending compared to the overall credit that you're allowed to, or like money that you're allowed to borrow. So let's say that I have a limit of like $1,500 and I'm only using $500, then the rate would be like 500 divided by 1,500 would be 30%. And then you're recommended to stay at around or under that 30%. So like it is even like better if you're not using like the full range of that like credit card limit, you know? So if you don't spend that much, like it's not gonna harm you. So I would say like maybe assign like a certain amount of money that you want to like. I think some students have like put, it's just a certain category that they know they're going to put on their credit card. Like I'm going to put my groceries on my credit card, and I'll know I have money to pay that off, and then it won't be like too much spending on it. So yeah, that's a way you can kind of like tackle that. But yeah, you won't get penalized for not spending on it. If anything, like that might be to your benefit. Mhm. Yeah, I don't know if there's any other questions. Yeah, this is the link again. For those that joined a little late, I can put it in the chat again.
Yeah, and thank you again for coming and speaking with us and giving this presentation. It's definitely some really valuable information, and we appreciate your time. And I did record it, so we have quite a few other general members as well that we'll send this out to. And we just appreciate the work that Bears for Financial Success is doing. And yeah, thank you for coming.
Yeah, thank you. Thank you so much. I do like giving this presentation because I feel like it's super helpful and I feel like it helped me so much. So yeah, thank you so much. All right, I'll head off.
Of course.
Thank you.
Thank
Thank
you.
you.
Bye. Good
Thank you.
night.
Bye.